Discuss the issue of divergent monetary policy right now, and that comes obviously in the wake of the U.S. Federal Reserve that is preparing further rate hikes in that country, and most African economies that are preparing either to hold their interest rates on hold or to cut. In fact, just yesterday we had the Bank of Ghana announcing a 100 basis point cut to its interest rates. Joining me in on this conversation at this stage is Lesibo Mtata, who is an executive chief economist at Investment Solutions. Well, Lesibo, thank you so much for taking time to join us. So this issue of divergent monetary policy, it's topical in the sense that our African economies benefited quite significantly from easing in the developed markets, particularly the US. So we had a flood of capital coming into African economies as a result. Now that they're on a tightening path and we are on a sort of a steadying and remain on an accommodative path, the issue is, what does this mean for our flows and what does this mean for our currencies?
Yeah. There was a fear that when the Fed continues to hike, countries that are exposed to capital flows in sub-Saharan Africa, that will include largely SA, but more specifically up north, those that have dollar debt will find themselves in a more tricky situation. That still remains a concern, but I think what has now happened is that inflation, having actually edged up significantly higher in most countries up north, has now began to taper off. Still elevated, but has tapered off. But what's clear about all these countries is that growth has weakened, and growth is just inflationary. When it weakens, it means there isn't enough internal demand, and that creates looser conditions, and it could be problematic if we still have a tighter monetary policy, and that's why we're finding some easing. So it is divergent in that way, but more local issues are becoming top of mind purely because of what the Fed is doing. They're communicating their policy effectively. They're taking away the uncertainty around where they'll be going and the pace at which they'll be doing it. It looks set that they may hike interest rate in June. That's well measured. In fact, it's well in the price. And what we're beginning to see is that even when they do hike, the opposite becomes true. The dollar weakens, and countries in emerging or frontier, which most of sub-Saharan Africa will fall under, find that there's less strain on their currencies. In fact, there could be some appreciation that comes around.
Well, joining us in on this conversation right now is Alan Thomas, and he is a representative at the IMF in Rwanda, and he is there in the studio with my colleague George Ndirango. George?
All right, many thanks, Fifi. Now, we'll probably get the earpiece in so you can hear most of your questions, but I'll just take it in from here for now. Let's just, Alan, let's get into the policy rate here in Rwanda. It was kept at 6.5% as of the numbers that were released, but one of the biggest issues that was raised was the decelerated growth in broad money. Now, we have ambitious infrastructure projects, ambitious policy stance predictions as well, but just help us understand why we are not seeing a lot of picking up from this 1.3% as of December last year.
Right. Well, I think there are a few issues. One, of course, inflation had been rising late last year, a lot of it to do with food prices. Right. The central bank was cautious then in stimulating the economy with too much liquidity. Right. So reserve money growth, which is what the central bank controls, was quite limited. Also, Rwanda is a small economy, doesn't have a lot of foreign exchange. Right. And so when there's less foreign exchange flowing through the system, that then has a bearing then on the multiplier effect as well. So the multiplier between reserve money and broad money starts to weaken. Right. But certainly, you know, the growth had been slowing down, and there's a desire, I think, as things change, to try to ease this a bit. And obviously, the latest inflation numbers have been coming down. So I think going forward, Rwanda will probably behave more similar to other countries which have begun to loosen. And
probably as we throw to Oni in West Africa, it doesn't help that the economy is tied in entirely to food particularly, because the economy sways. Anytime there's a drought, the economy dips tremendously.
Well, but this is the reality in most sub-Saharan African economies. Right. Food corresponds to 30–40% of the basket, and what needs to be done then, of course, is to increase agricultural production, try to find ways then to compensate for poor droughts with better irrigation.
Right. All right. Let's throw this conversation to Oni in West Africa. Maybe we'll just get the sound in here as well.
Well, thank you very much, George. I have here in the studio with me Bongo Adi, a senior lecturer at the Lagos Business School. Of course, taking a look at what the MPC decision that we're actually hoping to hear today. You know, it's almost like it's kind of like the same thing happening in most parts of Africa. Well, let's start off with Ghana, for instance. Ghana, of course, has dropped. Nigeria, we are keeping our fingers crossed, hoping that the MPC holds at this point in time. But let's take a look really at what's happening in West Africa, government policies, decisions being taken, and the fact of a possible, hike in the US. What's your take?
Yeah, I think, well, looking at the divergent path of America, the United States, and countries in West Africa, we see countries that are just reeling from the impact of the commodity price shock that's been at play for quite 2-3 years now. So they have different trajectories. In the United States, it's about the leveraging for almost 8 years now. The dollar, the interest rates has been very low, sometimes negative in the Euro region, for instance. In the United States, it's been close to zero, so leading to the leveraging of the economy. But here in Africa, government source of revenue had dried up, in West Africa specifically because of commodity price shock. So the challenge of governments in West Africa is to find alternative or sources of revenue to fund their budget.
Which leaves us really vulnerable, isn't it?
Exactly. So we have countries that have fiscal deficit that are very high. Ghana, for instance, has a fiscal deficit of about 6.5% of GDP.
All right, then.
Yeah, and Nigeria has a fiscal deficit of about 30.4% of the budget. So this puts these economies under very severe
But just
constraints.
goes back to what I did say earlier. I mean, Africa is a continent with so many countries, and these countries have their economic peculiarities.
Definitely.
And really what determines what decisions they take. Well, over to you now, Fifi. I mean, just listening to Mr. Bongo Adi on this particular issue. Very different countries in Africa with varying economic peculiarities that inform the decisions they take at the end of the day. As long as we have to keep borrowing from the West, I guess most African countries will remain vulnerable. What's your take, Fifi?
I agree 100%, Ani, and in fact, we're going to continue with this conversation. We're still talking about divergent monetary policy, and of course, helping us do that are our guests. That's Lisiba Mutata, who's Chief Economist at Investment Solutions, Alun Thomas, who's a representative at IMF Rwanda, and Bongo Adi, who's a senior lecturer at the Lagos Business School. Lisiba, let me just bring it back to you right now. Obviously, we've got our MPC that meets this week. Consensus is that interest rates are going to remain on hold until until the foreseeable future, I suppose. But what are you expecting the Reserve Bank to say, and how are you expecting them to take into account some of the moves that the Fed is making? Of course, their FOMC minutes are due tomorrow.
Yeah. So this is one of the most important meeting that they will have. And I think in there what will dominate the discussion is around scenarios, what ifs. Because where we are now, we have been talking about downgrade for some time. It has now happened, and the market response has been very sanguine. But what ifs? What if we get the local component of the debt issued by the National Treasury getting tipped into non-investment grade? That will set in motion a few things, which will include capital flight. We may have a situation where bond investors may be forced to sell as we get booted out of other indices. We've already been taken out from JP Morgan. Their criteria is that they wanted all three rating agencies to be investment grade. So as soon as Fitch came with its decision, along with Standard & Poor's, we lost our place in those indices. But the biggest one will be the City Wigby. And that could be like a $10 billion type of capital movements that happens. That will be top of mind for the SARB, and they will run scenarios of what ifs. And I think in it will cause them to be a lot more cautious. They may even revise their language that the interest rate hiking cycle has come to an end. They may reword that to allow themselves an opportunity that if the what ifs were to happen in a way that we get a situation where there could be a disorderly flow of capital, they'll be able to respond to it. In it, I'm suggesting a lot more hawkish SARBs to be expected.
So a hawkish SARB to be expected on Thursday. Of course, George is still with us. And George, I understand that the MPC, or the Kenya Central Bank rather, is announcing its interest rates next week. And of course, you guys are doing this against the backdrop of an election year.
Right, we've seen a lot of cash being channeled, funded into that, and we've seen a lot on the issue on whether exactly we should maintain it or hike it. The US is going against the grain. But let's just hear Alan Thomas's view on the same. We've just seen about Ghana cutting their rate. Tanzania, Kenya, Nigeria, Uganda, they're all cutting their policy rate within the last 2 years. Where exactly is the interbank rate?
Interbank rate in Rwanda? Or
yes, in general. Where do we see a general consensus?
I think that the policy rates, which determine the interbank rates, are running sort of 7 to 10% in the region. And if you have underlying inflation about 5%, that's about correct. You think of a real rate, a neutral stance about 2. So I think, that's where you'd want to be in economies where inflation is single digits. If it's high, obviously, interbank would be higher.
All right, possibly as we wind up, the role of the reserve ratios in Africa, I'd just like to know, is it too tight for credit expansion?
Well, credit expansion is supply and demand. So, what people have been arguing is that demand has been weakening, and that's been a big element of the credit story. But certainly, more liquidity would boost the credit.
Many thanks. We'll have this conversation on the side of this particular interview. IMF President Representative Alan Thomas helping us understand just a brief on what the region is experiencing with the Fed and these particular decisions. Oni?
Well, thank you very much, George. Now, Bongo, just a final one from my end here. Taking a look at the decision we're actually hoping to hear today, do you think Nigeria, do you think really at the moment the central bank is in a very tight corner? That's torn between not worsening an already bad situation and ensuring that our interest rates do not remain so low and that we're actually losing investors that we so, need dearly. What's your take on this balance?
Yeah, I think the central bank is actually in a very tight situation right now, but at the same time their goal is price stability in the domestic economy and also speeding up the growth process. So we are seeing the economy turn around, but I don't think we're in a very bad situation right now, because the last time the country went to the bond market to search for money, our bond was oversubscribed. And, so that shows that there's still positive outlook on the economy. And also looking at, our ratings. So we are not as bad as South Africa, so given our debt. So I think the prospects are not that bad.
All right, then. Well, thank you very much, Bongo Adi. Fifi?
Thanks so much, Ani. Of course, I'm also saying thank you to Lisiba Mtata, who is a chief economist at Executive Chief Economist, at Investment Solutions.